Hello guys, so hope I am on time today. It's 11 o'clock and I will be just waiting for a few minutes until the other guys come. So today's subject is why technical analysis. So we try to see um, how the traders look at this technical analysis and what is it, this technical analysis that all the people use either in day trading or in swing trading, which is called short-term trading, and and if it is used with investing also. Okay, so the subject of today will be hello Vincent, how are you? You are the first one to come. Although I don't see you watching, but you are here. So it's strange. So so as I told you, the live stream of today will be on technical analysis. And hello, wise man, how are you? Today I come on time. Okay, it's rare. I'm always late, having problems with this software. Today it works very good. So thank you very much for coming, and happy Thanksgiving and happy holidays, since we are still in the weekend. Hope you are not working for the weekend and you enjoy your time. And for this session, we try just to speak about technical analysis. Hello, MC for Peace. Thank you for coming. So I have right now 4 watching, which is good. Whoever comes to attend, and we can discuss and we can ask questions. Oh, I am sorry, Vincent. You are working today? Okay. Hello, Rikoshi and City. How are you? Yes, it's busy. I know November and December is too busy for everybody, and the people are working too much, and the businesses are working too much because it's the end of the year, and this is where most companies they make more money. Okay, and hope this more money goes into the stock, and the stock will go up. All the stocks will go up because of this. Hello, Artkov. Thank you, guys, for coming, and happy holidays, Thanksgiving. And I hope that, I know there are some of you that they work for the weekend, some others they don't work, and it's very good to enjoy yourself with the weekend. And right now all the companies they don't like that the people they don't work on the weekends, because there are a lot of work to do. Some jobs, it means some companies they don't work on the weekend. Okay, like for example for stocks, the weekend they don't work, and that's it. So because right now you are 8 guys, so hello Nastilanochi, bonsoir, comment allez-vous? He's always writing in French. That's good. I don't know Spanish. I know French, but Spanish no. So thank you very much for coming. So I want just to have some people here, and then we can begin. And my question to you, since you begin this, what do you think about what you call technical analysis? Technical analysis, and what is it? This technical analysis that all the people they speak about. Hello, Empty Mind. Hello, how are you? I see almost my students are here, which is very good. Now, my question to you is just a general thing, since we are speaking always about technical analysis. What is it, this technical analysis? Now, in order to understand technical analysis, everything mostly is based on price. It means whatever you see is all based on price. And okay, so Ricochet and City, he says, I use it to determine the trend 9 and the 20 moving average. Oh, okay. Ricochet, we will speak about this in the moving averages. I don't use them. I don't use them, and I have never used them. I want to use them before, but when I see the price, I find they are useless. I will explain later why they are useless. All these indicators that you are using. It means if you use one of the indicators and you think that that it helps you make money from the market for stocks, that's very good. But if, for example, Ricochet, NCCT, if you, for example, send me an email, put in a chart, put this moving average that you use, and tell me what you think it tells you to do, and I will send you my opinion, and I will tell you that it tells you nothing. Okay, there are other ways that are simpler ways to give you more benefit than these kind of things. But you know, as you know, it's things that have been created a long time ago. It looks like 100, 200 years. It means it's old. The people, when they want to trade, they should find something to indicate something, and they rely on this thing in order to take actions. This is what is it, technical analysis. Okay, so Vincent said, I know you said you have been successful with your swing trading for many years, but for students that has taken your course in general, how many percentage do you think is successful versus your fault? Now see, Vincent, students, when they just begin to use, there are some students who will never succeed in anything. You know why? Because they just begin, for example, something, and let's say you begin with a stock, second stock, third stock, you don't see any money. For just an example, you stop everything and you say, oh, this doesn't work. Okay, strategies, they don't work like this. Strategies, you can, it depends where you are, it depends how you select the stocks. If you are selecting bad stocks, you are still doing mistakes. How can you see the money? Okay, so it is a process. Now when you say what is the percentage, I have seen students who send me their stocks. They find stocks that I have never found. Why? Because for me, I don't search a lot. Okay, I have a guy who discovered a stock which maybe you know, it's a new IPO, which is called Square, SQ. No, when he told me he bought it many days or many weeks ago, when I see the chart, I was so happy with my student because he found that stock. Now, how he finds the stock is just because he applies my strategy. It means my strategy is so simple. It just lets you discover stocks. Okay, whatever are the stocks, new, IPO, very old stocks, big stocks, small stocks, whatever stocks you are looking for, and in every sector, in every industry. This is the good thing. Okay, now the percentage of who succeeded or who fails They fail because if someone fails, it's just because he is not ready yet to do this trade, this kind of business. This kind of business is risky. If you have $500, $1,000, and you expect to make like 5,000, 10,000 in a month, still having this idea of a gambling state of mind, you will never succeed. And some people are just, most of the time they are angry. They want something that it's like they don't believe in probabilities. If you don't believe in probabilities in trading, you will never make it as a trader. That's why, Vincent, I'm trying to explain all these steps to you. At least you understand how things work. You need to get the skills. Now, in order to get the skills, you should work hard. It means you should, even if you don't work with money, even you use the chart that we are using. Okay, you buy stocks, for example, today according to the strategy, and you follow them. Okay, you can even put a notebook, or you can put a diary journal, and you can write what you bought, what you sold, and you see after 1 month, 2 months, 3 months. Okay, most of the people, when they do trades, I ask them if they are courageous, if they want really to trade, they want really to succeed. They send me, for example, one stock. I tell them, okay, you want to tell me if it is a good or a bad trade. Okay, whatever is the trade, don't hesitate. So you should give me what is the resistance line, the purchase price, the stop loss, the support line, all what I ask for that stock. Now, when they give me this information, I know when they enter, I know when they exit, and I try to see my strategies. Does this person or this trader has made mistakes, yes or no? Most of the time, if you lose, if you don't make money, you are still doing mistakes. And this is the problem. It means, how can you do mistakes and you want the performance to change for you? It will be the same, because you are not working with my strategy. You are still scared of the market. You buy a stock and then it goes up a little bit, then you sell. It means you are still having some problems. That's why my strategies, it doesn't work like this. It works with continuous work, and you are serious. Okay, so all these gamblers, all this, they think that buying strategy, it works. And he told me, even in the questions, when someone asks the question, I understand that he has understood nothing. You tell me, oh, what is the percentage that your strategy do? It means, what does it mean? It means he thinks that the strategy works by itself. Okay? The strategy doesn't work by itself. The strategy gives you the rules. You should follow the rules. When you follow the rules, you make money. If you do mistakes, you should correct the mistakes in order to get money. That's how the strategy works. Now, let's see other guys. Hello, Joker player. So he has something. He said, tell me, sir, $100 is possible to open a real account to trade stocks. Okay. Joker player, where do you live? Are you living in USA? I don't think that you are living in USA. Okay, $100. If the commission is $5 or $6, if you buy a stock only one time, it will take $10 from your account. $5 commission to buy, $5 commission to sell. So it is $10. So if you do 10 trades, your money is gone. So, oh, you are in Morocco. Okay, I'm sorry. If you are in Morocco, it depends on how much is this money for you. It means in Morocco. Okay, so I don't know how much you can buy shares or you can buy things. But understand that here in America, I'm not speaking about Morocco or about Europe. Here in America, $100 is too little, is nothing. What can you buy with $100? If the commission is $5 or $6 or $7 when you want to buy, so the broker will take $10 from your $100 just when you do one trade. So if you do 10 trades, it means your money is gone. Hello Hassan, thank you for coming. Thank you Joker player for coming. Thank you Hassan, and for the new guys who are coming. Now, MC for peace, he says you prefer breakout trading over reversal. Okay, the thing that wherever you want to enter, it's up to you. If you follow my strategies, it will be different. It will be so easy. We don't use moving averages. We don't use anything else. Now let's begin with this technical analysis. Why the people are using everything that it is like in technical analysis? Hello Andreas. Thank you for coming, and happy Thanksgiving for all you guys. Now, let's begin with technical analysis. I'm telling you something, maybe you will be astonished how the old guys work, like day traders, where there is no technical analysis, there is no chart. Okay? So, do you imagine that people in the past, there is no computers, there is no cell phones, there are no tablets, no laptops, there is nothing, because even internet, it just comes in 1992 or 93, so it is something new. So what about the beginning of the century, like 20th century, in 1900? How the people they trade? It means, I understand investing, you can see the company, you can see a lot of stuff. But if you are a day trader, how do you work? So I will just give you an idea how the people work, and it's a bit funny. So Joker player says, what's the minimum deposit that you think is sufficient for opening a real account in the beginning? No, I'm not saying how much money you should have in order to begin an account. You should see the broker. Some brokers, they ask you no minimum. You put 100, you put 2,000, you put 5,000, it doesn't matter. But some brokers, they ask for a minimum. So you should see, you in Morocco or in another country where you want to open an account, you should see what is the minimum, and each website, it gives you the minimum. If you don't know, you should chat with them or call them, and then they can give you the answer. Because for me, whatever you have, you can open an account. So for me, I don't have problem. If you have $1, you can put it, whatever you want to put. Okay, but understand that here in the USA, $100 is too little. I don't know how much money there is, depends on the broker. And I don't think that you can do American or USA brokers because they are expensive. Okay, so you should seek cheaper brokers in your country or another country when it is cheap. Okay, now let's thank you Joker player, because here in America the commission is expensive according to other people in other overseas, like in Africa or in other where the currency is not that good compared to the dollar. Okay, now how the day traders in the past, before this technical analysis, before computers, before internet, before even the chart, how do they trade? It means they go to the stock market and they want to buy, to sell. How do they know the information? Other time we have yes, Rikoshi, a phone call, yes. Oh yes, Hassan said here in Canada, interactive broker is $10 commission. $10 is too expensive. They have one share with 1 cent, I think, or less than 1 cent. Try to see that, which is not flat rate. So that is good, maybe better than $10 for commission. Hello, Tilden. How are you? Good afternoon. Um, as I'm telling you right now, most of the people, they use the phone, and some who have some what we call shops, and there are traders that they go to these shops and there is a board, okay, a board like this, and they put the stocks by their symbol, and each 15 minutes they give the price. Okay, each 15 minutes they give price, so until the end of the day. So the people, what they do, they try to write numbers, especially the very important information is the close of yesterday and the open of today. That is the most important thing they should know, because let's say yesterday it is $20. It closes at $20 at 4 o'clock. But today it is $20.15. When the open is 15 cents more than yesterday, most of the traders think that the stock can continue going up for today, so they buy at $20.15. It means they put their bet and they wait for each 15 minutes. They will be waiting for the new price. If the price is still going up, they will make money and they can sell at any time. This is how the people do. So they rely only on the price, because the price doesn't lie. I told you always to have this idea. The price doesn't lie. It means when you say now the stock is $21, the people who bought at $20.15, they have 75 cents profit. What they do is they sell. They sell all their shares. When they sell, they have no shares to sell more, so they get their money back with profit. After 15 minutes, maybe the stock goes more and more and more, and the people who wait, they will have more money. But the people who sell short that day and think that the stock will be going down, they will be losing more and more and more money until they stop their loss and they exit the trade. This is how in the past people they trade only with the price, okay, and it was fine. It means everybody is doing his business. Some they make money, some they lose money, depending on their thoughts. And there are also at that time newspapers. They were very popular at that time. Each morning, most of the traders and investors, they buy some newspapers, okay, Wall Street Journal or any newspaper, and they get to see where the stocks are. At the time, it means beginning of the 1900. It means there are not a lot of stocks, okay, just a few stocks. That's why it was very easy, okay, and they can and at that time it means you don't have that much. But through the years things change, and there are also newsletters, recommendations. People they pay in order to get these stocks names, in order to invest for the long run. So it's like this. There are some people who short the market they short the stocks, okay? And this is how things are going. Hassan said it is called tape reading. Yes, tape reading. And one of the most famous ones, they always use this tape thing. Till then, applied your method, new high of Suzuki high. For example, Suzuki high was 50. I bet 51, but it opened way higher than 21. How to place order in this case? Oh, okay. Till then, I'm telling you, excuse me. Here in this live on YouTube, I am not answering specific questions about training and about trades. So till then, can you please send me an email and let me see here. Okay, please send me an email, and after we finish with this session, I try to discuss with you. I try to discuss the thing that you have, because you have a problem on when to buy and which price. Okay, so till then, I am not here to explain my training, okay, on YouTube. So don't give. Yeah, thank you very much. It means it's private. When you ask me questions, you should send me the stock, and you should tell me when you want to buy it, or what is the problem, and then I will answer you. And understand that if you are in the subscription, when you ask me a question that it is really affecting you, I can make videos and I put them in the subscription, like a golden subscription, and I will explain into details by videos how to deal with this problem. Okay, so thank you very much. Till then, send me an email whenever we finish this. Now, as I told you before, people in the past, they have no chart, they have no technical analysis. The only thing I have is just this these numbers, which is the close, the open, maybe the high of the day, the low of the day. This is what the information they get, and everything is on paper. It means they write all the information in order to trade. So they don't use technical analysis per se. They use only the price. Now, in the future, it means from 1900s and the future, a lot of people, when they begin to make the chart, okay, and they put the prices, and people, they begin to make conclusions. It means you see the chart and you make certain things on the chart based on price, and you think that this will help you make the money because it has worked in some stocks. Okay, so this is the beginning of what you call technical analysis, and they begin to use anything like moving averages, and then they use indicators, then they use the volume. It means they use anything that can help, and people, they become creative. Okay, creative, it means people, they begin to create new things, create new indicators. Understand that now we have more than 300 indicators. You find them in the charts, you find them in your broker chart, 300, and each one is like a small strategy. But the problem is that with all these indicators, they are lagging indicators. Lagging, it means they give you the last price that you can see yourself without the need of this indicator. And if you change the information for each indicator, the information on the chart will change. So that's why these kind of indicators, they are not reliable of how the people will buy, how the people will move the stock. Okay? This is about the indicators and moving averages. A lot of people, they think they see the volume. When the volume begins to grow up, or they see it in the chart, they go and they buy. And they see that the price will follow the volume and the stock will be going up. This is for day trading. But after I have studied all this stuff, indicators, moving averages, I find them lagging. It means lagging, it means they tell you the history. Okay? They tell you the history of the stock, but they are not able to tell you how the stock will behave in the future. And for us as short-term traders or swing traders or whatever day traders, what we are looking for? We are looking for the future. We are not looking for the past, because the past we know, and everybody knows the past. Okay? Everybody knows the past because you see the chart or you see numbers. Okay? And you can understand that the stock either is going up or going down. But in the future, does this stock continue to go up, yes or no? Or does this stock go down, yes or no? And this is the problem that face technical analysis. Okay? But most of the people, they use it right now, and they use a lot of indicators in their chart. Okay? Thinking that a lot of indicators will help them make the money. But in my own experience, I deleted all the indicators. So when someone talk to me about indicators, okay, I don't respond that well to this because I don't use it. And even in my channel, I spoke a little bit about indicators, about moving averages, but I don't want to go into details because I don't believe in them. So that's why I don't encourage people to do them. Because if you are going to do them, there are more than 300 indicators. Each year, some people, they publish books and they create new indicators. They mix with this, with this, with this, and they create another one. So the people think that because this is a bestseller, they buy the book, they read it and try to apply what the trader has said. But they figure out later, at the end of the year, they make no money with this indicator, so they will be waiting for the next year to buy another indicator. And this is the history of indicators. That's why we have a lot. Okay? And you find sometimes some people invite you for free webinars or free seminars in some big cities. And if you go to them, the only thing they do is they advertise for the new indicator or the new software that they have, either a broker or indicator. And they say if you can use this and this, you can make money. But in general, most of this stuff is not reliable at all. Okay? Moving averages, especially for me, because for me, I'm speaking about my own experience. I'm not speaking about other people. There are some people who use this and they are successful and they make money. It's just because they do, it means it's good for them. So the best way is to try and to see what works for you. Now, if you are going to follow me, understand that I'm not using those stuff. So the steps will be very simple, and how to find stocks is very simple, and how to follow them, how to put stop loss. It means it just needs a little understanding and practicing, and then it will be all okay. Okay? So please, if you have more questions, since we are doing technical analysis, and then we can go and continue with another subject, because I just begin with technical analysis. Some people, they use the company also to get some information to help them understand what's going on. So as I told you, using a lot of indicators will never help, because you can't see the chart well. The chart, for me, it should be clean. The only thing I put is the lines. These lines that I put, colorful lines, it just show me where I bought, where is my stop loss, where is my resistance line or support line. It just show me where I am in the chart when I bought the stock, the date and the price. Very important to know the date and the price. Where is my stop loss, and where are the other lines like resistance line or support line. Now, if the stock moves my way, it means I am right. Okay, I will be looking at the money. I am making money, even though I am not going to see my broker, because I am making money. And it's very simple. You just see how many shares you bought, what's the price you bought with, and you see the price of now. The chart will give you how much you make and what is the percentage. So you don't even need to go to your broker, because the broker, you go to it in order to buy another stock only. Because for me, since I am using stop loss and I change it to exit the trade when I have a profit, so whenever I see that I exit the trade from the chart, I go to my broker and I buy another stock. This is how I do, and this is how I trade. Now, there are some people who think that technical analysis is weak because they neglect the company. And this is what we call position trading. The people, they want to use the company criteria, the company cash flow, balance sheet, and competition, and what it did in the last few years, and compare it with other companies in the same industry, and see if there is a possibility to make a conclusion that this company will make good in 1 year, 2 years, or 3 years. That's why these are called position traders. They use technical analysis to enter, and they use company information. Okay? When they see a strong company and the stock is beginning to go good, and analysts say good things about, so they just make a conclusion to buy this and to leave them from 1 to 3 years. This is called position trading. Okay? So we have a question with the Joker player. Tell me, sir, what is the monthly percentage that you make? No, see, the monthly thing changes according to which stocks are. Sometimes I make big, sometimes I make less. So, for example, I have made, in order to understand this Joker player, I made a trade. It means I bought a stock. 5 months and 2 weeks, I got 59%. Okay, 59%. So, if you say, for example, it is 10% a month, or 5%, or 2%, or 6%, for me, I'm trying to look at the year. If I am making a high percentage, I don't care about a month when it is low or another month which is big. I care about the whole year. This is how I do the trading. I do by the whole year. I don't do by the month. But it's very good idea to check if you are making money, yes or no. He said, John Player said, I know that the percentage depends on my performance, but I just want to have an idea. Yes, this is what I tell you. Let's say for example, this month you do some trades and they were bad. You lose some money. But the other month you do, for example, 15% or 20%. Now the other month you can do 5% or 7%. So percentage they change because this is not a job, it's a business. Like any other business, one month it does good, the other month it does better, does less. Okay, it's a business. It's like companies here, like here in America. In November and December, they should do a lot of business. If they don't do in these 2 months, November and December, in Christmas, in January, February, March, their business slow down because the people here in America, they don't buy that much, but they buy November, December too much. Okay, so you see the difference. So when you are taking trading as a business, it will be different from when you take it as a job. When you do a job, you should know how much you get in an hour and how many hours you work in the week. So this is information that you should know. But in the business, you can work whatever hours you want, and either you can make a lot of money or you don't make that much money. So this is what's the difference between a business and a job. So don't ask a job, don't do like trading as a job. You ask each day, you should make something. Like someone told me, I need $2,000 each month. What should I do? Now here, when you ask for example, this $2,000 each month or 3,000, 5,000, I say to him first, how much money do you have? How much money do you have? This is a business. Let's say I give you an example that it is concrete. Okay? Let's say you have a car dealer and you are selling one car each month. Let's say you get $2,000 or $5,000 or $1,000 profit. But if you are a big dealer, you can sell 100 cars, so you can have $50,000 or $70,000 a month. So you see the difference? It's about the account that you have. If you want to make more money, you should make your account bigger and bigger and bigger, and this, it will help you make bigger money. Instead of having $100 each month, you can make thousands of dollars each month. So you see, so the account is very important. When you know how to trade, it's very important. So let's see a question from Hassan. He said, what is your experience with stocks with low volume like 200,000? They tend to move faster than liquid stocks like FB with millions of shares. Now, when you say, Hassan, when you say 200,000 volume, it depends on which stock are you speaking about. 200,000 views, 200,000 volume, which is shares traded a day. There are some big stocks that have 200,000 and there are smaller stocks that are. The smaller stocks is the faster in general, okay? In general, the faster it goes. For example, penny stocks or stocks that are $6, $7, $10, $13, they can grow faster than a stock that it is $100 or $200 or $300. So it depends. So the volume has generally nothing to do with how the stocks move, because I see some stocks with low volume and they go good. But I see other stocks with low volume also, but they don't move at all. So it depends on the stocks themselves. It doesn't depend mostly on the volume. Because what makes 200,000, you should see the history of this volume. Has it changed, yes or no? And you should see the price and how it moves. So each stock is different. So you can't make a rule. You say, oh, any stock that it is 200,000 should go quicker or faster. Yeah, it will be false. Because I will show you, you show me stocks with 200,000, they go fast. I will show you stocks with 200,000 that they are not fast. They are slow. So this is not a rule. So don't make rules. Don't make rules when there is no rule. Okay? Hassan said $50 or $20 of stocks. It doesn't matter. Okay. It doesn't matter. What it matters is how the stock moves. Sometimes low volume and the stocks are moving good. But sometimes also some stocks with low volume, they don't go that fast. So if you are Hassan, if you want to make a rule, it will not work. And because I will give you examples, you tell me because you should apply this rule on every stock. You should take, for example, percentage. You should take stocks, different stocks, and you put your rule and you see them all and you make a conclusion. Okay? But understand that for me also, if I want to make higher percentage and big risk, I should go to smaller stocks. Okay? $10, $15, $20, $18, these are small stocks and they go fast. But whenever you go down, you will find faster. Okay? Faster. A dollar stock that it is dollar, if it goes 10 cents, it means that it goes 10%. Okay? Let's say you buy a $1 stock, you buy 10,000 shares. Okay? Each share is $1. If this stock goes 10 cents, you will get $1,000 from this 10,000. So you see, you will be making a lot of money. If you stay 1 week, 2 weeks, 3 weeks, you can make 5,000, 7,000, or you double your money. Okay? But understand that there is a risk. These stocks are riskier. So you should be okay with risk. And this is a good thing. If you are a guy who likes actions, who likes to make to push the stocks to the end, you should go with smaller stocks. Now the stock that I have a live trade and it is in my subscription, I stayed 5 months and 2 weeks, 59%. 59%. For me, I don't care about the time I spent in the stock. For me, I have made a big percentage. This is what matters for me. Okay? Let's say, I'm just giving you an example. I don't show you my money, but I will just tell you. If you have 100,000, you make 59. So in these 5 months, you make $59,000. Okay? So understand that it is big money. If you have 200, half a million, 1 million, 2 million, it means the more you have good stocks, the more you can have more money. So it's always like this. Wise Man has another question. He said, should the traders divide their capital into even more positions when buying stocks like $5 a share? First, I don't know how much money you have when we say many positions. But I give you, wise men, I give you the general rule. The general rule is the more stocks or the more positions you have, the less risk you have. And it means that you, let's say someone before, I'm just telling you some mistakes of the people they do when they do position sizing. Let's say this guy has $24,000, okay? And he told me that he has bought like 15 or 16 stocks. I told him this, in terms of position sizing, this is a mistake. Why it is a mistake? Because you have a lot of positions in a small account. For $24,000, if you put 14 position or 20 position, what does it mean? It means you are buying a stock with $1,000 or $2,000. This cannot make you a lot of money. Okay? So I tell him, you try to make the positions bigger. Okay? But this, it depends on each person how he can manage that, because some people they can do it, some other people they can do it even if they have the same account, because it depends on themselves. It depends. And there is another thing, which is commissions. Okay? If you are doing 20 stocks on your account, 20 stocks by $5, which is you buy, so you are spending $100. When you say $100, so these stocks, if you stay with this, let's say 1 month, all these stocks, 20 stocks, you stay them 1 month. So how much money you are risking from commission? You will give $200 for your broker. But let's say it's only 1 week, 2 days, 3 days, 2 weeks. So the commission will grow up. If the commissions grows up too much and it is not proportionate to your account, what will happen? You will end up losing your profits to commissions. So you are just feeding your broker. Your broker will become fat because of you, because you are always feeding him, do commission, buy, sell, buy, sell, buy, sell, and you don't count anything. That's why in trading you should be careful. You shouldn't just trade and without looking how much. For me, for example, although I have a big account, but I don't trade that much. If I buy a stock and it's good, I will stay until the end. So the end could be one day when there is a gap up. Let's say today, this is the funny thing. Sometimes you get rewarded by the market. It is just because you do something right. I buy a stock today, which is called ANAC, ANAC, $78. Next morning, I find it $135. Right now, I don't know. It's going down for a long time. I sold it last year or the other year. So you see, you put some money today, tomorrow it is doubled. So this is a good thing. Okay? But having a lot of positions, and there is another problem. You can't manage all this kind of thing. Someone is sold, someone is going up, so you should have time. If you do like 15 or 20 position, it means you should have a bigger account in order to handle all these positions. But when you have a small account, don't put a lot of positions. At least you can buy a stock. Okay, you can buy a stock. You can buy some 1,000, 2,000 shares or whatever. Okay. And understand, it is not only penny stocks. Stocks that are $7, $10, $15, $20. All these are good if you have small accounts. and understand that if you have a good one, believe me, you will make more money. I have a guy who one of my students who has never seen money. It means real money. When he trades just a little bit, and he just he see $50, $100, 150. This is the most money he have seen. Now when he take my training and he begin to search for stocks, and then whatever stock he bought the other day, he stays many days, and the stock begins to give him money, and he begin to see hundreds, and then he go to thousands, and he sent me an email. I say, man, I want to exit this trade. I have $2,000, $3,000. He has never seen this money. He was so happy that he wants to exit the trade, and I say, no, this is the rule. Change your exit stop loss. Change it to some kind of money, but follow the rules. If you have 2,000, if you stay more, maybe you have 3,000, 4,000, 5,000. Why you should limit yourself when the market is giving and you are right? Because this is the thing. Either you are right or you are wrong in the market. If you are right, stick, because the market will reward you. And this is what we do. But if it is a loser and you tell me, oh, I'm staying until it goes up, okay, you are not doing my strategy and you are doing something else, and it's your problem. Okay? So Hassan said 4 or 5 position stocks maximum for 24,000. Yes, this is looks good. This looks good. If you have, for example, 5,000 or 4,000, and you buy a stock that it is $7, $5, $10, $13, it's good. But try not to buy stocks that are expensive. You go to Facebook, for example, and you buy only 100 shares, 120 shares for all your account, and that's it. It's you can't make it like this, because when the stocks are big, even they move good, they move fast, because you don't have that much money. You have only 100 shares. If the stock, even if it moves $10 and you bought 100 shares, you make 1,000. But if you have bought other stocks, smaller stocks, you can have thousands of dollars more than Facebook or Google or Apple. So, and buying a few shares, a bigger stocks, you buy few shares because you are scared. You will limit your profit, okay, and you are not going to make any money. Thank you, Wiseman, and thank you, Hassan, for your questions. So, this idea of technical analysis, it is just to use something to show you where to buy. If there is another indicator that shows you where to put the stop loss. But from my own experience, I find that machines cannot know what is your tolerance. Machines are doing something with numbers, okay? But it is the person who decides. In the market, it is not machines that change the price. It is people. Okay, that's why you find a stock, you find millions of shares traded. It means there are millions of traders, there are a lot of traders, they trade too much. And you find a stock that it is haunted. There is zero volume. The stock is the same for 1 day, 2 days, 3 days. No one buys, no one sells. But if one comes to buy 100 shares, the stock is going $1, 2 or 3. So you see, it's completely strange in the market. Now Hassan has another question. Beginners, when we are wrong, we don't like to limit our losses, but when we are right, we limit our profit. Yes, Hassan has said the right thing about the psychology of the beginner. So beginners, when they are wrong, they don't like to limit their losses. This is a problem. And when the stocks are going up, um, they limit their profits because they are scared that the stock will go down again. So it means they are always scared. If you, for example, you go to a job and you are scared to be beaten up by some people, or you get insults, or you can't work, or the conditions are so hard, so this is a frustrating job. You should quit this job, find another job. In the job that you do, I know there is a lot of stress and it's stressful, but at least you try to do what you want to do, and according to the rules, and you do your job without being threatened. Because when you are threatened, your performance will be bad. You can't make good things when you are scared. Okay? That's why you should always think a lot when you are threatened. When you are threatened, you should find another way to make money. And that's why the people who are in trouble in one job, they are so scared to change another job. They think that that is the job for them and there is no other job, and this is the problem. Okay, opportunities that are in the market or in the job market or wherever you go, you find opportunities. So the main thing is that you search. It's like in stocks. Okay, for me, I don't search daily. I'm telling you something you don't believe. Sometimes 1 week, 2 weeks, 3 weeks, I touch nothing. I see my chart, my stocks are going up. If I want to change the stop loss to exit for the trade, when I see that, I will do it. Okay? If there is no need, I will not do nothing. And this is, you will see it in my trade that I have done, and I put in my subscription. 5 months and sometimes 4 weeks, I haven't done nothing. Each week I explain the same thing, and I say I'm not doing nothing because the stock has not given me new information. Then the next until the people they get fed up with this videos, because the stock has not done nothing. But when the stock moves up in a gap up and then begin to trend, I change. I say, oh, today I have made a change, please watch. So the people, they come and they watch, and I give them the reasons. Because why you should change the stop loss or the exit plan if there is nothing happening in the market. But understand that some people, they have no patience to wait. Okay? They have no patience, and this is a problem for everybody. Yes, when we have, like said Hassan, less stress, less time, commitment. Yes, and I see a lot of people, especially here in America, you know, you shouldn't be scared to change the job. If a job is not good for you, don't quit just to quit, but find another job. When you find, you quit that, you go to the other one. Maybe it is good for you. Maybe you are making more money in the other job and you are respected better, and you have a new future. It's better than to be with a small job, then at any time they can fire you and then you can lose everything. And that's why the people, they come to do like swing trading, is to make another income from trading stocks. Okay, some they use they rely on other people, like the 401k here in America. Have you ever asked yourself why they put your money into a mutual funds and they don't put your money into stocks? Have you ever thought about this? I have seen some who have who I taught before, one by one by using Skype. Some of the people, they have never seen how much they have in their 401k. They have never seen where their money is going to which mutual fund. Is it this mutual fund? Is it performing? Is it very good or is it a bad one? Okay, and it was strange, you know. If you don't take care of your business, see where is your money going, you end up broke at one time. Okay, so as I told you before I continue with the technical analysis, there are some people who do technical analysis with fundamental analysis, and these people are called position traders. Now what does it mean? It means they use technical analysis when to buy and when to exit, but they use which stock to buy according to fundamentals. It means they go to the company and they see its competition. Does this company doing good in competition? It's better than other companies in the same industry. Does it have good products better than the other companies doing the same thing? For example, if you see Apple and from America, and you see Samsung from South Korea, you will understand that those are the biggest companies in the world. They compete, but all the others are low. Okay, they're not doing as much money as they are. But things will change. Okay, the one who will do better job in the future, he will reign, and that's why we have this competition going on. Another thing is companies that make a lot of money will, because it is doing good job, good business, it will grow faster and faster and faster. You see, for example, some companies, they make stores and they make more stores and they make more stores and they will make more money from their stores. Okay, so they are making more money, and then when they are making more money, they have cash flow. It means they have money to use to open other stores or to give gifts to their workers. Okay, it means they give something for free to their workers as a reward because they were working with them. And this is the good thing that you should always think about when you are working in a company. If it gives 401k or it gives something, so you should do this because it's giving you some money for free. And this is the good thing about 401k. It means some people are giving some money for free, and this is so good. Now, investors wish the opposite thing. They don't believe in technical analysis. Okay? Now, why they don't believe in technical analysis? Because they see the stocks going up and down, but some stocks are continuing to grow up for many years, and other stocks are going down and they are not making any money, and then they go bankrupt. So for investors, they are looking for the long run. They are looking for 5 years, 10 years, 20 years from now. Can this company be here for 5 or 10 or 20 years from now? That's why they put their money if they see that the company is doing good. But if the company is doing bad, they will take their money from it and the company collapse. For example, if you look at Twitter, at the beginning, 3 months or 4 months, the stock was doing so good, and at that time, I was buying Twitter at the beginning. It goes from like $45. In 1 month or two, it goes to 74. It was so excellent stock. But when it stops at $74.74, it stops going up and going down. I make more videos explaining that Twitter is no more a good stock, and I was right, and the stock was going down and down and down. Okay, so those people, the investors took their money out from Twitter, and Twitter collapsed. Now, for investors, what counts is the long run, not today or next month. But for us, knowing the company information for 10 days or 15 days or 1 week, it doesn't help us make money. Because you see good companies, but they are going down. So, knowing that this company is good, and it has good competition, but the stock is going down. So you understand that the stock movement sometimes has nothing to do with its company itself. So the play changes when it is short-term trading or when it is day trading. The play change and the game change. For some people who succeed in making investment, first they should have a lot of money. And beginning with a small money, it can help you make some money in the future, but don't expect too much. Don't expect too much from investing when you have small money. That's why those people who are doing 401k, their accounts doesn't move that fast. The reason for that is that mutual funds are the source of that problem, because they are taking fees. They are taking percentage each year, and when they take this percentage, you will never understand which is which, because your account, you can't just go each month and check what is here, what's here, because they don't supply this information. You should dig by yourself, and you call them, you ask questions, and in order to understand how the mutual fund works and how do they take their fees. And the good thing for you guys, if you are investors, you are not doing technical analysis, or you have some investment in 401k, you can check your 401k mutual funds and other things, and where your money is put. You can change that, because each mutual fund, there is, they show you the fees, 1%, 2%, or 3%. It means if your mutual fund goes, let's say, 6%, if the management take 1% to 2% or 3%, this is taken from your money. Okay? Since it is taken from money, your growth in your investment will be lower and lower. It will not be good. And that's why you ask yourself, why they don't let you choose stocks instead of mutual funds? Because they will not make money. Because if you buy a stock, you buy 20 shares, the company doesn't ask you to pay for management, because it is not management, it is just a share, and the share goes up or goes down. So they don't ask you anything. Okay? So if you, for me, I have done something, I will tell you something different from all the people here. When I begin to work, and I have worked for many years, and I have my 401k, I took all the money and I pay 25%. It means tax, and then I pay 10% penalty, because I took them before I reached 60 years and 6 months. Now, why do you think I have done this? I have done this because I see that the future, if I leave my money there, it will grow slower and slower and slower, and the people are taking fees. So my account will never become big as I wish. So what I did is, First, I begin to make what we call the Roth IRA, which is to put your money there for 5 years or for 5 years and on. You can take money from it, and the good thing is that you don't pay tax. That is the deal that I have done with those accounts. I have another accounts with regular accounts. So you see that for me, I'm looking for higher percentage. I am not looking for 1% or 2% or 10% or 6% per year, because the inflation is 3%. If you get 6% from your 401k, 6%, 3% is inflation, it means you are not growing your account that much. And this is the problem. How do you spell it? Joker player. What is it? You mean Roth IRA? But you don't have Roth IRA in Morocco. Oh, it is called Roth IRA, but you don't have this account. You should be here in America to do this account. It's an account where you put your money and you don't pay tax. This is by the government here in the USA, but it's not it's only for USA citizen. Okay. So as I told you, no, it's not available for foreigners. Yes, it's not in a. It's just a special account by the government. Okay, but the others you pay tax. But I don't know for international traders. You should ask someone who knows the tax in your country. Okay, so as I told you before, investors, they don't care about this technical analysis, and they think it is not good for them, which is okay. Okay, they don't care when they buy. The only thing they care about is the company in the future becomes bigger and bigger, and mutual funds, they like this company, they buy more and more and more, and then they can make more and more and more money. Okay, this is what in general the people do when they are investors. If they are, for example, they use technical analysis, they try to use something that indicates the price, that it gives them the chance to enter, to buy, because when you see the chart, you want always to buy from the bottom and to sell the last day, the first day, the last day. Okay, this is impossible, but there are some techniques that helps you to find this kind of stocks, and you can sometimes buy them on time, and then you can make a lot of money from them. Okay, so these techniques exist, but for me, I don't believe in technical analysis. That's why I don't use it, and that's it. So thank you very much for watching. Please, if you have some questions about technical analysis or investing or something related to that, I will be waiting for you to just have some questions, and I will answer them before we finish this session. Yes, you say, Joker Play say you don't rely on technical analysis. No, I don't. The only thing I use is lines, like colorful lines. If you Joker Player, you go to my website and you find um, you find what is it called, free training about the chart. Okay, free training about the chart. You can take that training, it's free. You just see the chart, see the colorful lines that I use in order to trade. So I don't use technical analysis. Now Kali Native Imperial, he said, is technical analysis better than fundamental analysis? Now, technical analysis is based on price. So most of the people who use technical analysis are day traders and short-term traders. Now, if you are an investor, you invest for for more than 1 year or many years. Most of the people, they don't need that. They don't need technical analysis. You need fundamental analysis about the company itself. Okay? So Kali Native Imperial, it depends on what you want to do. Are you doing investing for the long run? It means you buy companies and you stay more than 1 year, 2 years, 3 years, 5 years, because they are good companies. You buy them and you hold them for many years. You need to do the fundamental analysis. It means you should search for these good companies. Not all the companies are the same. Some companies, they can grow faster, they make more money, and some other companies are doing bad in the same industry. It means I'm always speaking about the same industry. It means the same group of stocks or companies. Let's say banks. You try to see which is bank which is performing better than the other banks and making more money. So when you invest in it, for example, you have the chance that it becomes bigger and bigger and bigger and you make more money. Technical analysis is relies on the price of the stock. But for me, I don't use technical analysis. I use only support and resistance lines and the other stuff that has nothing to do with these indicators. Yes, Jason 8 says support and resistance line is part of the technical analysis. Yes, but in general, Jason, in general, people when they speak about technical analysis, they refer to indicators and they refer to moving averages. This is what they use. But for me, I don't use that. Resistance line and support line, it is just a virtual line that you do yourself. According to the price, yes. Okay? But I don't use the other stuff, like indicators, moving averages, volume. Even volume, I don't use it. So that's the difference about my strategies and what I do and what the others. And Joker Play say, we are traders, want to use your method. We are not investors. How we can't rely on technical analysis? Now, my strategies are only relying on resistance line, support line, and my criteria. So if you want to try to search for stocks or to do my training, you should follow me, what I do, and don't follow yes, my method, as he said, your method is simpler. My method is, my way of doing trades is very simple. The chart is so clean. There is no clouds, there is no a lot of stuff in it, no indicators. It's clean, and this is the good thing. It means when you see the chart, you see it clean. There is no problem with that. Yes, as he said, as Hassan said, because there are less variables. I don't use a lot of variables in my chart. Okay, the basic thing I'm looking at always is the price. Where is the price now? Is it a price that I can enter? Yes or no? So how do I know? It is because of my criteria that I have. My criteria, which are so simple, it tells me if I want to enter or not to use that chart. Okay, some charts are ugly and they are not good, so I will not go in to buy this kind of stocks because they don't trend. It says your strategy is suitable for day traders. Yes, I have a training for day traders. It's training level 12. How to day trade using the chart and candlestick. Okay, this training will show you how to do day trading. But for me, I'm looking for the long. It means the short term, which means I'm looking for many days, many weeks, or many months. I'm looking for a trend. Okay, a trend is your friend. If the stock is trending up, you can make a lot of money. But it doesn't mean that you should stay many months. Okay, you can stay 1 week, 2 weeks, 5 weeks, 1 month, 2 months, 3 months. It depends on the stock. When the stock is giving you money, stay. When it stops giving money and it's heading down, you should exit. These are techniques that you can learn from me. This is what I teach. It means techniques that you can apply and you can know if the stock is going up or it will stop. But it will give you indications. Okay? These indications, what I am teaching. There are ways to see the chart. It tells you that the stock has stopped to do to go up. Okay, and the major thing for me is always the price. When I see the chart, I see where is the price and how the chart looks like. But how to search for stocks using stock screener, which is training level 2, I always try to spot the beginning of the trend. Okay, the beginning of the trend is everything. If you find that and the stock will be trending, it will be a piece of cake. Yeah, it needs some skills to handle the stock, but it's good. You can make a lot of money from it. Why should I buy a stock today and sell it for tomorrow or 1 day or 2, where I can make a lot of money in staying 1 month or 2 or 3? The other stock that I stayed is like 5 months or 2 weeks, so it's a long time. I want to stay more, but the stock stopped. And when the stock stopped and I exit, after a few days it has a gap down and it goes down for sure. So I am sure I am done with the stock. I will never buy it again. Hassan said, price is king. It tells when to enter and when to exit. Yes, it means there are some indications and it's very good. And it tells you everything about the stock. But I see a lot of people who try to buy stock, and when I see the chart, I get scared. Someone sent me a stock, $2, and he told me, what do you think about this stock? I see the stock, I think it's good. But when I see the past, I see the stock was $98. Now it is $2. I say, man, this company will be going bankrupt. Although I don't see the company itself, I don't go to search, but I tell him that this company maybe it go bankrupt. Okay, because it lost all its money. It was $98. Now it is $2. What do you think this company will do? It lost all its investors. The investors or mutual funds, they have sold all their shares, so the stock will be going down. So it is not stable anymore. It's going down, going down, going down, until the company decides to go bankrupt and it will stop running the business. But if the company go bankrupt, you will never see the stock and your money is gone. Try to understand this. Your money is gone. So for me, I will never buy a stock that is going down. Never. except when I know something about the company, that it is not going to go bankrupt because it is a still solid company. Empty Man said everything have the price. Yes, everything have the price, but you know, traders, when they begin to trade, they don't know how to enter into a stock and buy it. It means in the momentum, when, which price and when, which date, according to the chart. Okay, according to the chart, they look and they see. And if you see people, there are thousands of people, and each people are using different indicators, different indicators, different strategies. If you are making money, okay, stay with your strategy. That's good, because whatever Joker player said, do you teach penny stocks? Yes, penny stocks. It means it's the same, but they are more risk. They are more risk. It means they go faster, and you can make a lot of money from penny stocks. But you should be aware that there is a big risk of losing a lot of money. Now, for example, for you, Joker player, if you have $100 as an account, I don't know in other countries if this is big, but here in America it is not. The dollar, if the stock is $2 or $5, or you can't buy that much, and commission is too big here. So all the stocks, they move with the same principle, but some stocks they run very fast, and others they are slow. Some are sleeping. They don't go up or go down for many years. Okay, and sometimes you can see, for example, the IPOs. It means the new companies, they get listed in the market. Some, if they are good, they will be so good and they go so good in the future. But some of them, they collapse, and you can lose a lot of money if you stay a lot of money. Okay? Hassan said, if someone is scared to lose money because he's new to trading, he can less risky industries and stocks just to get used to trading for you. Yes, which is very good. If you are scared and you are new to trading, you can even have the chart and put the stocks and follow them. When you begin to see the money and you see yourself, you begin to know what you are doing, you can go to your money and begin to trade. So because the broker is like a bank, he will not push you to trade or ask you by force to trade. But some brokers, they oblige you to trade because they will have a charge. They charge you each month if you don't trade. So for me, I was with a trade with a broker, and then I took all my money and I changed it. I don't want that someone obliges me to trade or not to trade. My broker should be neutral. If I want to trade, I will trade. If I don't want, I don't want. So no one will push me. Empty Man says, tell about IPO price. Now, IPO is like any other stock. It means it opens, it comes to the market, it's a new company. If it is a very famous company, some people, they like it, they buy more and more, so the stock will be going up. Okay? But if the people, they don't like this company, they will not buy this company, and the stock will be going down, and they begin losing money. So not all the IPO stocks will be good companies. Some they go low, some they go good. So it depends on you. You can make, for example, a list of IPO. You can put them as a list, and you follow them daily, and you can use my strategy to tell what price you buy this company. When it reaches that price, you buy. It's very simple. You just apply two rules, criteria. Okay, and then you just, when the company is having this signal, you just buy and you put stop loss and you wait. If this company in the future is going up, what does it mean? You will be making a lot of money. But if the stock goes down and this company, you see that it is not doing good, don't buy it because it goes down. And you say it's an opportunity to buy because the stock goes down. It goes down because there is a reason. Most of the time, if a mutual fund is selling his shares, it means that there is a danger that this company is going down, and then you have gap downs. Okay, gap downs, it means the stock will be going so far down with $2, $5, $6, and the stock is losing money. There is a question of, I am a bodybuilder. Oh yeah, bodybuilder. Okay, that's good. I need to exercise, man. So, what is a good percentage of winners versus losers? How much of a stop loss do you use on your trades? Okay, the first question, what is a good percentage of winners versus losers? This is a bad concept. You will not make money if you have more winners than losers. You think that, but it is false. That's why I understand when someone is new or beginner, he thinks what the people tell him. So I'm telling you right now that if you have, for example, they told you, oh, if you have 60% or 70% of winners and you have just 30% or 40% of losers, you will be making money, or they are making money. This is not true. You can make 70%, 75% winners and 25% of losers, but you lose money. Not just you make money, you lose money. So in my training level 5, okay, I explain a new concept, and this is what you should do in order to make money from the stocks. So and the question is called how to make money from stocks. I give you a concept. It's different from winners and losers, and you will understand by calculations. I will show you that the ratio between winners and losers has no importance in making the money. And you say why and how? I will explain in the training. Because here, excuse me, here I'm not going to give you my training and explanation for free. So I'm just trying to speak about general things and to explain everything in general. But I don't go to details. Now your second question says, how much of a stop loss do you use on your trades? Stop loss is tricky, and you should study how to calculate stop loss. Stop loss, it is not to put 2% or 5% or 10% in all the stocks and you say this is a stop loss. This is not a stop loss, because there are some stocks that they need 1%, some other they need 4, sometimes they need 10, and it depends also on you. If you like risk or you don't like risk. So there are a lot of variables in stop loss. If you want to understand this, you can check training level 6, how to calculate stop loss. Okay? You can do, for example, do my subscription, okay, golden subscription, and you have 10 training levels for free. And this is, you will have all my strategies, the basic strategies, 10. If you subscribe and then you study everything, and then you can ask questions, I will send you videos in the subscription that explains everything you need to become a trader. Okay? So trading is a waiting game, like Jesse Livermore said. It's not my thinking that made me money, but my waiting. Yes, thank you very much, Hassan, for this statement from Jesse Livermore. This guy was one of the famous traders in the world. He traded with numbers only before we have the chart, before we have technical analysis, before we have everything. Just numbers. Just the close of yesterday, the open of today, and then he make a trade. And he was a millionaire, and he was one of the best traders in the world. Now, Empty Mind said, difference between IPO, face value, and premium value for listing. Oh, I am sorry. Empty Mind, I am sorry for this technical things. You say IPO, the difference between IPO face value and premium price for listing. This is if something is before the IPO is public. Why you care about this? You should never care about this because it's not your business. Because you are not buying this company before. Okay? So what is the important thing you see, Empty Mind? Is when you see this company in the market, it gets to the market as an IPO, and then you begin following it and see if you can buy it. But before, most of the time, they don't sell shares before. Okay? Most of they sell, some of these companies, they sell for big customers. Let's say a customer has $10 million. He is a trader, an investor. Now, when you have a lot of money, the broker can show you some investment. They say, okay, this IPO is excellent. It is $10. If you want to buy like $1 million, we can sell you a big chunk. Because when it is IPO, this $10 can go to $20 or $30. You will make a lot of money. This is when you are big customer. But when you are just a small customer, no one will look at you and no one will give you to buy this IPO before they become public. So Empty Mind, try to forget about this before the market IPO. Try to see the IPO when it gets to the market, and that's it. So I am a bodybuilder says, what is the minimum amount of money you recommend when starting to trade stocks? Okay, bodybuilder, whatever money you have, you can start with it. There is no minimum, there is no maximum. But the more you have, the better you will be. Because I'm giving you an example. If you have $1,000 or $2,000, what kind of stocks you will buy? You will buy penny stocks, smaller stocks. If you have 50,000 or 20,000 or 30,000, you can buy bigger stocks. So you should be free to buy whatever you want. But when you have a smaller account, you should be obliged to buy small stocks. And this is too bad because the risk is too much. So everything is done by risk. So try to begin, even if you have small account, the most important thing is you open an account, put your money. It's like a bank. No one will ask you to trade stocks. Okay? You can use my chart. I have a free chart training. You see how the chart works. And if you want to train with me, you can either see subscriptions, silver or golden, or you can check training level by training level. And the first training is for free. So go just to my website and you'll find the first training, which is 28 videos. It's for free, and you can just go and just check and watch these videos. If you begin to like my strategy, you can just go to here is the website and the email, and then you can send me a private message. You just check everything in the website and send me a message. Training level 1 is for free. You can click that, you go and you watch. And if you like the way I do business, it means the way I trade, you can be a student like the other students that are here. Okay, so that's it. As I told you before, technical analysis, I don't use all what we call technical analysis. The only thing I use is resistance line, support line, the purchase line. It means I put colorful lines, and the stop loss. That's what I use in the chart. All my charts are clean. There is no indicators, there is no moving averages, and this is the way I trade. It is so simple. And whenever you have you begin to study, if you have any question, I can go with you and we have a direct stock and we can study it together and see. You should understand everything. Although most of the people, they don't ask questions because it is so simple. Okay, there are some criteria that you should do in stock screener. It gets you stocks. You just see which is the best one, and you buy, and then you put stop loss. It's so easy. But everything you should study. You should take time to study in order to make money. But because making money is so easy. The only thing you need to do is to know what are the steps you should do. Okay, so you shouldn't mix strategies together or a lot of stuff. And this is what I always do. And for all of you guys who knows, so there's a question with the Kali Native Imperial. He says, we're looking at a company's stock charts. How far back do you go? 1 month, 2 months, 3 months? Now here, Kali, Native Imperial, are you speaking about short-term trading or are you speaking about investing? Now for me, I try to go as far as I can. I want to see if this company is healthy. It means it's going up. If I find a stock that it was $50 and today is $2, I am not going to buy that stock. Whatever you tell me about the company, I will not buy, because I see the time has no importance. I see how things go for this company. Okay? What if they give you a job and they tell you each month they give you a raise $100? Okay? Are you going to take this job or to go to another job that they will ask you, that they will make your salary less and less and less each month? So it's obvious. If a company is making money and the mutual funds and big guys, pension plans, banks, they buy more and more and more. So this stock will go up by force of buying. So there is what we call in economy demand and supply. If the people like the stock, like the company, they will buy more. If they buy more, the stock is going more and more, and it has a new high prices each year. If the company is bad, there is a supply. It means a lot of people are selling because they don't see any money. So the stock will be going down, and this is how I see things. Okay, this is how I see things. I see things in terms of growth, not dividend. Because some people, they buy companies to have their dividend, which is supplied each quarter. For me, I don't follow dividend stocks. Even if I buy a dividend stock, I don't care about the dividend. I am caring that the stock will go faster to make me more and more money. I am bodybuilder. He says, do you spend a lot of time with fundamental analysis? No, I don't do fundamental analysis. I use only resistance line, support line, and some criteria that it is my criteria. That's it. I don't use even technical analysis. I don't use except for resistance line and support line and my own criteria. We use the stock screener, and you can even use a list of stocks. When they have the momentum to buy, you should buy on that day around 3:30 before the market close, and you put stop loss. If next day the stock goes up, you hold it for whatever days or weeks or months. Now if the stock goes down, the stop loss will take care of this and I will exit the trade. I don't have to think about it. So sometimes I have some stocks I don't see the broker because I have the chart. If my stocks are going up, I don't need to go to my broker. So I am planning the trades from my chart. And this is for the whole year. I do the same thing for the whole year. Hassan said, watch his old videos with chart, you will understand his way. Okay, if you go to my channel and you see the older videos about Facebook, about the Twitter, especially Facebook, you will see how I trade. I traded Facebook from the first IPO, from the first day until today. Whenever there is an opportunity, the stock is going up, I am in. Most of the gap ups that Facebook have, I was in. Most of them. Even the Twitter, when it was doing good. The last Twitter I did is like 2 weeks or 3 weeks ago, and it was a success, and I put it in my subscription. It means if you are looking, for example, to see a live trade for 5 months and 2 weeks, each week I do a live video and I will show you the stock that I am in for 5 months and 2 weeks. You will see that, and it's in the subscription. So it's something real, and I will show you how to follow the stock, and I will show you when the stock will stop and how I exit, and all this by live videos. So this is serious trading. It's not someone who give you the chart and they say, oh, go here, buy here, sell here. This is not true. Okay, this is not true, because who can believe? Any stupid person, if you give him the chart going up, he say, oh, buy here, sell here, because you see the chart. But whenever you don't see the chart, this is the trading. You don't have no trend. Okay, no trend. And then you begin, you buy and you follow, and then you see the trend, and then the trend begins going up and up and up. And everybody who see the trend, they can buy and go up until the trend stops and dries up, and then my exit plan, I will exit and I will have my profit. This trade I made 59% of this trade a profit, which is good for me. Whatever the time it takes, the most important thing is to make money from the market. So I am not using fundamental analysis. I don't look at the company. I have never looked at the company. One funny thing, one time I traded a stock called WWE, which is wrestling. Now I thought this is a library, because WW, I thought it's the World War I or II. I thought it's about history, because I see the WW. Okay, like a World War II or World War I. I thought it was like a big library or bookshop, and it is in the stock market. But later, when I exit the trade, I find that it is wrestling. Is that you watch in TV, the wrestling thing. So that's why I don't see the companies. I can see the name or the industry because it is in the chart, or the sector, yes. But going to the company, looking at the fundamentals, if the company is doing good or bad, I know it's doing good because the stock is going up. I don't care about if they say it's not making money. I don't care. What I care about is the price. Is the company doing good? Yes or no? That's what I'm looking for. I'm looking for to make money for the short term. I am not looking to invest for 10 years or 20 years. Okay? So this is the most important thing you should consider when you are doing the stuff. So bodybuilder, you can check my website. Yeah, most of the time I don't do shorting. I have a training about shorting, because shorting stocks mostly is in day trading. I don't do day trading, and I don't want to short stocks in swing trading because it is so dangerous. Because if there is a gap up or there is something else, it will be a real problem. That's why you should be careful not to do short selling in swing trading or in short-term trading. Do it in day trading. If you are a bodybuilder, if you are interested, you can check training level 11. Okay, training level 11. It's called how to sell short stock, and it gives you techniques, it gives you the risk, it gives you a lot of things on how to do, especially risk, because some people they short, they don't know what they are doing, and you will be, if you don't understand that much, you can be in debt for doing short selling, especially when you hold for the night. It is so difficult and it is so risky. There is another way to do shorting without even shorting. This is I think in my training level 19, which is called how to short the whole market using what we call inverse ETF. Okay, this training show you how to use ETFs, which is exchange traded fund, to short the stocks, but without shorting. It means if the stock is going down, this what you buy is going up, so you will make money. So this is another way to do shorting, but it is not really shorting stocks, because when you short stocks, you should borrow shares. Now with the ETF, you don't borrow shares. It's like a stock. But when the stock is going down, this stock that you bought with ETF, it will be going down and you make money. It's like the opposite thing of the market. If you are interested, you can check the training, and you can just see how you can do it in your training if you don't want to do short selling. Because short selling in general, it is for day traders. I'm sorry, I have some cold. So as I told you, things go good with what we call technical analysis, and this is how I trade. I don't follow people. I don't follow these 300 indicators. I don't put these indicators in my chart, so my chart is clean. When you begin to study and you train with me, it will be very easy, step-by-step guide, and you can begin training. Okay, so it's nearly 2 hours, so please, if you have one or more questions, and then we can stop this live session. Thank you very much, all of you guys who have attended this session. So if you have like a question, if you don't have a question, please try to check my website, and my email is here for you guys who are new, who have never seen my my website or my channel. Just try to check, and if you have questions, just send me the email. Okay, so thank you very much. I will be just waiting for a few seconds, and thank you very much for coming to this session. Thank you. Oh, thank you very much, Hassan, and good night. I know that there are some people who are working, and some they don't. So hopefully they go to sleep, or they are working at night. Okay. So thank you very much for watching. If you have more questions, just send me an email, and I will be with you right away. So another question, I am a bodybuilder. What do you tell people that want to trade for a living? Now, the most important thing is you have money. Okay? If you have a small account, you can't make, it's like a business. Okay? And I have given you this example before. Maybe you were here, or maybe you don't. You should have an account, a big account, in order to make for a living. And you should learn and have consistency in making money for many years, in order to change to status of a trader, and then you ask the government that you are status of a trader as a business. So you need, it's a step-by-step thing, but you need to learn how to make money, and then you practice, then you be patient, you correct all the mistakes, and then you begin to see the money. Now you stay for many years, you have more and more and more money, okay, and then you decide to do a living, because at that time you will see yourself how much you are making, how much you are losing. At least you have an idea how much you need for your life, because people are different. Okay, someone needs 40,000 a year, someone needs 60,000, someone needs 100,000. So this is for your living for each month. Okay, you can't oblige the market to give you $2,000 each month, or 3,000 or 5,000. If you have a lot of money, when you begin to trade, it will be easy for me to make this kind of money. But if your account is very small and you want to stop all your work, and you begin to push yourself very hard to make this money, and maybe you can't, so you are just wasting your time. So thank you very much, Tubal Kane, thank you very much. So bodybuilder, you should think this seriously. If you are thinking in the future, 2 years, 3 years, 4 years, you want to really make a living from this, you should begin to save more money, and you begin to train yourself. Because here is the deal: when you train yourself and you begin to make money, the only problem that you see is you don't have money. If you have 10,000 or 15,000, how can you live from that? You can't. As a day trader, you can't. So don't oblige yourself to do something that you can't do. Okay? So the main thing is to have a plan for the future. Let's say if you say 2 years, 3 years, or 4 years, I want to be a day trader or a short-term trader. So you should begin to train, and from your jobs that you have, one job or two or whatever jobs, you begin to save more money into your account. Even if you don't trade, it doesn't mean that you have money you should trade. The broker doesn't ask you to trade. It doesn't push you. So if a broker is asking you for an activity fee, for example, each month, if you don't trade, he will charge you, change that broker. Okay? There are some brokers, they don't ask you anything. Either you trade or you don't trade, or you invest or you do day trading, he doesn't care. And this is the good broker that you should need. If a broker asks you to pay for streaming data, like bid and ask, if you ask you to pay in order to see the right price, not the delayed one, so this broker is not good. Okay, just change this broker to another one that accepts to give you the streaming data for free, and he doesn't oblige you to trade. And a broker is like a bank. Okay, if you put your money for 10 years and you don't trade, he will not touch your money. He can even give you interest rate if you want to use that for interest rate. Thank you very much, Tubal Kane. Joe Alpha, hi Djellala, nice to see you again. Hello, Joey. We are at the end of the session. You come late today. Next time, try to come earlier, or you can watch this for tomorrow when the video is processed. You can watch it tomorrow. Thank you for coming, because we have been here for 2 hours and 5 minutes. Now, if you please, if you have more questions, you can ask. If you don't have questions, as I told you before, you can just send me an email and check my website, and that's it for tonight. Hope you enjoy your weekend, since it's the Thanksgiving weekend. Thank you, bodybuilder. Thank you very much. Djellala, what software do you use for trading? Thank you very much, Freddy. Thank you very much. Thank you very much, Freddy. I have training level 1 for free. 28 videos. So just take it, because it's just free. Okay. Let's see here. Training level 1 is for free. Okay, so Freddy, thank you for watching my videos on YouTube, but you can just go and take training level 1, which is for free. You find 28 videos, and this is the beginning of my strategy. You just have it and just try to study whatever. Okay. And as Joey Alfio said, what software do you use for trading? Now, see, I don't use any software. I have only the free chart. Okay, the free chart that I use, which is just free, and I use a free stock screener to search for my stocks. That's the thing. All is free. I don't use paid services or a lot of things because I don't need it. My strategy is so simple. It doesn't need to pay for anything. Okay? Because stock screener here in USA, they are free. You just put my criteria and they give you the stocks. And then you put them in the chart, which is free also. And then you choose the best stock, and that's it. Okay? So, Joey, thank you very much, Joey. Thank you. And here is my, as you can see, my email. You can send me an email later when if you have more questions. Okay? Because right now we are at the end of the session. It's 2 hours and 8 minutes. Now I hope that you enjoy your weekend, and if you have questions, just send me an email. And thank you very much, and see you next week on the same time, because I do always 11 p.m. Eastern time each Saturday night. Okay. Yes. Stop. Finviz, you have been mistaken. Finviz.com is one of my. Okay. Let's see if it goes. Finviz.com, those. Yes, this is my stock screener, but you can use other stock screener. There are a lot, not just this one. And a free stockchart.com. Yes, It's free, and you can just they told me there are a lot of charting, free charting the same, but I have never used them because I like this one. Since 2010 I didn't change it because I like it and it's free. So that's it. So thank you very much for watching. See you next week on the same time as this, 11 p.m. Eastern time. Thank you very much.